of this, I can assure you, right? So let's keep going. Your trade requirements, you have methodology. These are the things you need. Your materials, your working tools. You need methodology, you need a money management skill, you need mindset and psychology, you need a tool, you need to be able to do a research, you need to be able to put together a back test, and then you need to apply it. Right? These are the things you need. You need mentorship. Right? You can get mentorship privately and publicly, right? From a community, which is where you are right now. Okay? You need that. It's a necessity. Oyedepo understands this thing, and he accredits his success to his ability to identify a mentor in every area of his life. When he needed financial breakthrough, he read all the books that Hagin wrote, finished it, and then read the ones his wife wrote, just in case the man forgot to write some things, without even meeting him one-on-one. He was his mentor for financial breakthrough. So if there's an aspect of your life that needs correction, you need a mentor in that area. That's the way it is designed, right? So it is a necessity. Okay, because it's very easy for you to start to, rely on your own intelligence and feel that you are indispensable and you have all the information already and you can proceed. That is very dangerous. All right, so you need passion also. Of course, we all need passion to be here, to sit down and wait for me and hope that, you can still get money. So the first four, I'm not talking about the last three, but I have slides for the first four. So, but I'll go through them quickly so that we don't waste time. Your methodology is very important, and again, we're talking about general introduction of the entire course. So, methodology is very, very important. These are the areas where you have to ask yourself very simple questions of what kind of trader you want to be, what kind of methods you want to adopt, right? So there are different ways. I believe these are the basic 4 ways that you can enter any trade. Okay, you could be a trader that wants to trade along with the trend, right? Or you can just look out for range bound trades, trades between ranges, right? You can try to trade reversal. There are people who we call counter trend traders, all right? And then there's a mean reversion. Mean reversion is that if the market goes very high, it will annul itself, right? And maybe come back to retest the 20 moving average. Simple strategies like that. So you decide what you want to do. All right. So these are some of the questions you have to answer. And then what instrument do you want to trade? You have to answer that question also. What do you want to trade? We trade Forex. And I'm going to teach you a little bit about financial markets so you begin to understand the kind of Forex we trade. There's something we call spot Forex. Okay. Spot currencies. And there's something we call futures currencies. All right. Spot is the one where you give the allergy and then he gives you money instantly. That's spot. You are paying the amount immediately. There's something we call futures. Right? I have slides for all of those things. Right? So it's different, right? So but we focus on currencies, but not currencies in the actual sense. We're trading CFDs. CFDs are called contracts for difference. Right? So I'm going to explain all of those things when we get to the related slides. So, but you have to decide. Some people trade. Some people trade index. Some people trade gold. There's some people that the only thing they trade is gold. Once they wake up in the morning, they will just trade gold and go their way. So, you decide what you want, and then what time frame. Of course, you have to look at your active job if you have one. What time frame? How often do you want to look at the computer? How much screen time do you have? So what time frame? All right, and then you have to take the decision on how you want to enter the market, how you want to exit the market, how you want to place your stops. All right, so usually everything we're going to do is based on TA. There is something else we call FA. FA is fundamental analysis. TA is technical analysis. The very casual difference between fundamental analysis and technical analysis is that fundamental analysis tells you what to buy. Do you understand that? Fundamental analysis will tell you what to buy. But technical analysis will tell you when to buy. Do you get the difference? Fundamental analysis tell you what to buy, but it's not specific enough. That's why we go for TA. TA tells you when to buy, right? So our decisions, my decisions are based on technical analysis. All right. So going forward, you would have to pick for yourself, and then you now also ask yourself: do you want to do price action, which is more complex, or do you want to just do something like indicators, or do you want to combine both? And then you now have one to be your primary and the other one to be your secondary. All right. Some people use both. Some people use just price action from start to finish. Right. I use both. All right. I combine the 20 moving average. It's an indicator, so I use both. But it's very secondary for me. Sometimes I don't look at it at all. Right. So, but if you're a trend following trader, you might need a moving average, at least just to see, to have a visual representation of where the market is. So, yeah, money management is very, very important. All right, this is what I talked about when I say risks of ruin. There is a money management chapter, a day when we come together like this and we treat money management. So we talk about all of these things, probability, and then you understand. And then this is what I was telling you about when I said those that are playing gambling, bets, those who play this soccer betting, right? Their risk of ruin is big. That's why they will always get ruined. Do you understand? But we know that every once in a while they can get lucky. But if you see that thing they say odd, where they say the odd of this person winning and the odd of this person losing, they put it together, you see it's usually above 1, is it not? Yes, it means that when you have an odd that is 0 point something, the chance of that thing happening is higher. Am I right? But most of those odds are not 0 point something. So when we start to talk about money management, you will see what I mean. When we start to place different percentages, and then you understand, okay, some of these things are 3 point something odd. When the odd is 3 point something, it's crazy. It can't work out. The ruin is enormous. Thank you. The ruin is enormous. Can't work out. Right? So if you are patronizing all of these guys, you just know in your heart. The only advantage is that when you are putting in the money, you already prepare your mind to say that this one is going already. So that's the thing. So if you want to keep doing that contribution, you can continue. But I have to tell you, your ROR is crazy. It's crazy, and it makes no sense at all. And again, that's the edge traders have over gamblers. All right, those who patronize the casino and these betting games, I've never seen anybody who has accredited their success to these gaming houses, right? So, but you have a lot of traders. In fact, as a matter of fact, Warren Buffett is a trader, right? George Soros, all these big guys are traders. Donald Trump, these people are traders, okay? And you can see that it is realistic. Position sizing is very important in money management. So you have to ensure that if you take a position size, you have factored your stop into it. Abi, I've taught you predefining risks, but it's part of this course. We're going to learn it. All right. So if you're taking a stop loss that is 20 pips, I'm speaking jargons for some persons now. So, but if you take a stop loss that is from here to here, you say, I can only accept a loss that is this big. You must factor in, before you say, I want to give the broker this order, you would have factored in that stop loss. That's what we're trying to say. So you have to factor in your stop loss. You have to ensure that the position size you are using will guarantee your safety when you have your cluster of bad luck. If you use a position size that does not guarantee your safety when you have your losing streak, you're going to have issues. I don't care how good a system is, it will have losing streak. Are you all aware? No matter how good a system is, even if it's 80%, if it's an 80% system, you have 80 outcomes, there is no guarantee that out of, okay, let's say we have 100, and then we are taking 80 to be good and 20 to be bad. Do you know that we can have 5 of these 20 happen at once? It's possible that they can come in maybe in between every once in a while. But this here is possible also. This is called a streak. So if you are risking 20% of your account, you exhaust everything in this losing streak, even though you were winning all the way. So that's something you have to also take note of. When you are designing a position size, make sure that when you have a losing streak, you don't get blown out. If you have a losing streak and you're risking 1% of your account size, you will only lose 5%. The recovery of 5% is 5.25. You get back your loss. Right? So it's very realistic. But then the recovery of, even if you reach 1/10 and then you are down 50%, to get back 50%, you need to double what is left. You need to double what is left, which is 100%. You have 10,000, you blow it to 5,000. To get back 10,000, you need to double that 5,000. You need to double that 5,000, which is 100%. It's difficult. Okay, so those are some of the things. And then your capital, you have to determine, capital is important. Because that is the life wire of this business. How many of you go into a business without capital? It's not possible now. Some people serve their master for 4 years just to generate some capital, is it not? To start business. So it is only in Forex trading that people come without capital and hope to make money. You have to look for capital. And then I've told you that, there is capital. There's capital. Just go for it. In the course of this, even in this particular course, we are going to look at prop firms. I even have a screenshot from one of my students that did a $100,000 account. I just told him that, okay, once he finishes, he should screenshot it and send to me. So you see, he passed. On a $100,000 account, he had over $10,000. And on that $10,000, his personal money is $7,000. Because it's a 70-30 share. His personal money is $7,000 at the end of the month. The next, he's continuing with a fresh 100K in the following month. At the end of the month, if he makes 10% again, he gets another $7,000. Who says you can't make money here? It's possible. There's a month where he made $26,000. $26,000. And then they gave him 70% of that money. You know what's $1,000, Abi? It's almost 500,000. So if somebody gets 26 of it, you know that it's a lot of money. He's not a billionaire, but he has a lot of money actually, yes. He has a lot of money. Because the total capital itself is about 40-something million. It's $100,000. That's the capital he subscribed for. Yes, it's very possible. So, you have to when you bring in your hard-earned money, right? You call your community people and they do a meeting for you, and they generate. You know that kind of meeting you could do when one of your family members wants to try his luck outside the country. Everybody contributes their quota to help him to travel. Yes. So when they contribute the money for you and give you, you open your trading account and put it inside. You have to know how much of that money you're willing to risk. It's part of it. Okay, so when you are when you're choosing how much to start with, you choose how much you want to risk, and then you also choose how much you can afford to lose during your negative streak. If you know that if they contributed 10 million naira for you, and you know that if you lose 500,000, you can go and jump from, then make sure your position size does not allow you to get to that. That's what we're saying. This professional trading, you have to do all this maths. Okay, so and then loss acceptance is very important as a trader. I can't overemphasize this enough, because a lot of people don't want to accept losses. If there's one skill you want to develop or build, it is the ability to accept the risk that you are going into a trade with. When gamblers are better than us in this sense. When they go into the trade, they have accepted that risk and they are willing to give that money out. If you put 1,000 naira and then you say Chelsea is going to win, you are no longer interested in that 1,000 naira. But that's not the case for traders. When they expose a certain amount of their capital, and then as the trade starts, they now start to make trading decisions, whether to expand the risk or to quickly take the small thing that has entered. Right? So these are some of the things you have to actually work on. Right? So gamblers know that they are giving out the money, but traders don't know. So it's an important skill to develop. The skill that says that if I go into a trade with a microchip, that's what I call it, microchip, 1%, 0.75%, 0.5%. I don't care the outcome of that trade. I'm not bothered. That's how to trade. You cannot be a trader, a professional trader, and you are afraid. You are living in fear. You are panicking every time. No. That's not how to live. You will die early. You will die of BP. Yes. You have to take a trade that is almost an I don't care kind of trade. You put the trade, you don't care. What do you care about? The cumulative result. That's what you care about. Not the result on a trade by trade base. Yes. And that's going to save you. It's going to save you. Alright, so and then profit management. So this is where you have to decide what you do with your profit. You are here for money making sake. If you put in ₦1 million in a trading account and your needs are 20%, 200,000, when you make 20% or 19% or 22%, at the end of the month you withdraw it. Can do anything you like with it. It's your money. It's your right. Can do anything you like with it. So you must, from the beginning, decide that, okay, this is what I want to do with the money. You get an office, you furnish it, you sit down in it, and you start to trade. You make some money at the end of the month. You won't leave it there. You take it. Abi? You take it and use it all. And continue your trading. Yes. That's we have a lot of advantage trading Forex. Because it's very large. It's the largest. So we can do what I have just said comfortably. Alright? So mindset is very important. You got to keep a diary. I have about 3. Oh, I've forgotten that I'm connected to something. I have about 3 diaries, 4 or 5, right here. I'm not even talking about my house. Just inside here. This is one. It's filled. If you're trading professionally, you have to write. This one is full. I stopped using it. I just bought one. The other one, I'm already writing on it. Bring all of them. This one is a fresh one now. I'm working on. And then you have to write every day. All these things are calculations of my trade till today. This is where I am today. All of these are things I have written. This one is, earlier when I even started, right? All of this information. You write. You want to know how you are doing. This is business. We're not playing. You have to write. You have to keep track of certain things. Like the things that didn't work, the way even your behavior. You have to write. It's important. Amateurs don't do it. Ordinary people can't do it. That's what makes you different. if you are running a supermarket, you will have record. Is it not? If you're running a supermarket, you have record. You need a diary to know how much you invested, how much you made. You can't be trading blindly. You need to keep record. Keep record of yourself. And then, record keeping and snapshots helps you to even improve as a trader. See, the problem with trading is that you are your own Oga. It's an advantage and a disadvantage. And I tell you, the part of it that is bad is the part that all your life, there is always somebody around you who is telling you what to do, or somebody around you that because of them, you are not able to do certain things. In the market, there's nothing like that. You are free. Nobody is going to stop you from taking a position size. And all of these things have effect in your cumulative results. That's why you must keep a trading journal. You need a trading journal. Buy it and keep it. If for nothing, just for the feeling it gives you to be a professional trader, keep it on your table. Even if you don't know what to write on it, just buy it and keep it. Yes. Right? So, I was talking about snapshots. I have, if you look at my computer, you will see I have folder. I have shortcut. As I see a trade, I take a snapshot. It is now part of me. By default, once I'm about to take a trade, I must screenshot it because I want to come back and see how it was before I took the trade. All those things will help you to improve your win rate. Because if you have taken a snapshot, you finish, because most times traders don't go back to their old trades. They just continue like that. And they find themselves making the same mistakes over and over. Right? Okay, so and then I've talked about self-awareness. It's very important. Very important. It's key. Okay, even if you have to go to the beach and join those cherubim and seraphim guys that stay there and they are just staying like this and from morning till night, go and renew your mind. It's important. You need a high level of self-awareness as a trader because you are dealing with very smart guys, very crazy algorithm that is moving the price that you can never outsmart. And the only thing that you can do is to contain yourself and trade the principles that you believe in. Forget about the noise. Forget about what is going on. Just implement your own strategy. That's all. So you need some level of self-awareness to be able to avoid all this noise and do the right thing. Your frame of mind, probabilistic thinking, I won't talk about it. This is key. That is the life of Forex trading. Thinking in probabilities. If I start, I won't leave this slide. You just know that you need to think in probabilities. Outcome of trades are not certain. No matter meet in the financial market. And the financial market can be any of those financial markets in the middle. Do you understand? Now, because the government wants to borrow money from the individual, the individual now have to go to the bond office, is it not? The government bond office, and then maybe pay in $1 million and buy the government bonds. Now, the government is borrowing that person's cash to maybe do business or whatever. Remember, this type of cash the return of this cash has to be paid back within a year or less. That's the nature of bond. The next slide will tell you more about that. Okay, so the guy on this side is the person with money. The guy on this side is the person that wants to borrow. So both of them now, this one does not know this one. It's difficult. Even if I have money, there's no paperwork that is combining us together. I can't just carry my cash and give to you and say, go and use it. Is it not? When you borrow money from the bank, you know how hard it is. Yes. So, but that's how the bank generate their money. See the banks here. They are the first people I even put as the example here. This is a commercial bank. They are the financial market. Right? They are here. Now, if this person have a lot of money, he will deposit it with the bank as a normal savings. Is it not? Yes. And then what does the bank do? The bank will give it as a loan to the person that needs the money and charge interest. The bank can say, give me 5% every month. Right? And then this person, the bank is maybe giving the person 0.3%. Is it not? Yes. So you see the bank is making about 4.7% on that money the person kept. I don't know if it's clear now. That's the financial market you have just seen. That's what the financial market is. There are other examples of, the way that thing is done. You have investment banks, right? There are investment banks. I will go into details later. And then you have pension funds. Pension fund, their own style is different. What they do is you put in a lot of money in your youthful age, right? If you work with a big organization, they pay your pension, right? And then these pension companies will invest it into stocks usually, right? So they put it into financial assets that are bound to rise, real estate and all these other things. So now, when you get to the age where you can't work anymore, they start to pay you back. They've made money from your money, is it not? And you eventually die, is it not? Yes, and then they keep the money. I don't know if it makes sense to you. That's the way it's designed. That's the financial market. The other guys too are there. You have hedge fund, and then you have mutual funds. Who can tell me the difference between hedge fund and mutual fund? Quickly. Hedge fund and mutual fund. Yes.
Take risk of importers who import because of loss they may suffer.
Okay.
The mutual fund are just people, they just
Top part, life insurance.
They take interest, they pay interest on investment.
A lot of regulations. They are guided by a lot of regulatory bodies because of the nature of the risk. They take leverage products. You know what it means to take a leverage product? You are buying something that you are asking to pay for more than you actually have, which means that you can ruin yourself fast. Is that fine? But then the advantage is that they can give you a higher return. Is it not? They can give you a higher return, unlike the mutual fund. If you put your money in mutual fund, your money can stay in Stanbic mutual fund for, years, and then you just see a little fraction on top of it. But it's safer, is it not? They are not doing anything leveraged. They're not taking risk. Is that okay? Yes. So that's the basic difference. And then again, it just continues to tell us that yes, this is a combination of somebody who has money who gives it to mutual fund or hedge fund, and then somebody who needs money somehow, and then he picks it up from them, and then that cycle continues. And of course, above there, what you have is stocks. Some of them, these people are called intermediaries. Some people don't pass through these intermediaries, right? You can go and buy bond by yourself as an individual with your money, right? And then the government that is trying to borrow that money now will pick it up. The same thing happens to stock. You can go and pick up stocks. Just buy some shares of any company. You are participating in the financial market. Okay, so I'm happy that you now understand what the financial market is. I'm assuming that you understand. But I want to believe it's clear. Alright, so this is the financial market broken down. There are three major types of the market, right? You have the money market, you have capital market, and currency market. The major difference between the three of them is how their money is paid back. Right? That's the major thing. Okay, the liquidity. Right? The first one is not too liquid. You know what I mean by liquidity, Abi? The flow of the money is not so liquid. You have something like government bond. I don't think government bond in this country is working. It's not working, Abi.
It's okay.
If you even borrow them money, you are in trouble.
It's okay. It's okay.
But if you borrow them money, I believe you are in trouble. I'm not borrowed them, but I just believe that you are in trouble because Buhari will not give you back. They will tell you that they've removed that your money from all the tax that you have not been paying. So they reduce it. They reduce. Yes, they reduce it. Really, that's why a lot of people patronize, this forex trading and all these other things now, because the bond is crazy. It's nothing to write home about. Really, it's nothing to write home about. Yeah. So, and one thing about money markets is that the money involved must be paid back within a year. So if maybe GT Bank borrows money from Zenith Bank, it's called interbank, lending, right? If there is this kind of borrow, it's called, a transaction in the money market. So the GT Bank must pay back that money within 1 year, right? That's the way it is. And then the next one is capital market. That one exceeds 1 year. That's the nature. You have stocks, you have all these other things. They exceed 1 year. Bond is the money that you are getting from bond is as a result of the interest the government is paying. Meanwhile, the other one, which is shares, you are getting money as part of the profit that company is making. So they are not the same. There's a name attached to it. This one is called equity capital, right? Why this other one is called debt capital? You understand? Because it's a debt that you are generating your money from. But these other people, sport is the one where you take 46,000 naira in your pocket, walk down now to what's it called, Shita, and then they will come around you and then you change. That's spot forex. When you pay and you collect the currency immediately, that's spot forex. Can be done on platforms too. Okay, that's spot forex. Then the other one is futures. How many of you know what futures is? You know what futures is? Do you know any futures trader? Well, futures traders are mostly gamblers. They are speculators. Yes. See what they say. These guys are saying that I feel like dollar is going to rise or fall. Right? Maybe they are importing a huge number of goods. So what they will do is they will enter into a future contract with the exchange saying that give me dollar at this rate where we are today by next 3 months, regardless of what the rate is in next 3 months. I don't know if it makes sense, right? So give me, if dollar today is 460, even if dollar is 520 next 3 months, you will give me at this amount.
Which amount?
The 460. So it's futures. The same way you can reverse it, right? To get a lower amount. So if they believe that it's going to be lower, they accumulate it with a future contract to give it off by a certain time. I don't know if it makes sense again. So if it's 560 now and they believe that it will drop, so they go into a contract that gives them the dollar at 560 right now, so that in the future, in 3 months time, they bought it at 560, but you are going to accept it from them at 460. I don't know if you get it. So they have made some profit. Abi? Yes, that's futures market. That's how futures is traded. Okay, so
And if it decreases,
if it decreases, yes, it loses. So this futures thing was traded by farmers.